Okay, good morning everyone. Welcome once again to our weekly webinar. We're still describing this as lessons in the lockdown. A few weeks ago, John, we thought we maybe should change the title because lockdown seemed a distant thing in the past, but here we are once again. And if you're in England, then you're effectively in lockdown once again, I believe, John.
Yeah, and if you were listening to the scientific process, this was pretty much easy to anticipate. We don't have solutions that are effective, and the only way to dampen down the demand, the demand for hospital beds. And this is not going to cure COVID. This is just going to relieve the pressure on the system. So for business planning purposes, people should assume this is fairly normal. We'll do this a few times a year potentially until we get a vaccine that's prevalent and most people are getting it rather than refusing to take it. I think this will just happen again and again. So
yeah, no, but very interesting time. So we've been on our look around the region.
And by the way, because I don't believe in crystal ball predicting, if you plan for this and it's actually better, then fine, you're good. You know, there's almost no downside to taking this as base case and then everything's upside, rather than assuming it's going to go back to quote normal and then getting hammered if this happens again and again.
Yeah, no, absolutely. Okay, so we are on our look around the regions at the minute. We've done Scotland and Northern Ireland. Last week we had actually our second largest attendance for a webinar, which was fantastic. And today we are focusing on Wales. So we're going to introduce our guest just in a minute. You can see him there, but just by way of introduction, for any of the new people who have joined us, this is a weekly webinar hosted by myself, David Johnson, CEO of LEOcrowdfunding, and also Mr. John Corey of Property Fortress, who you've just heard from. So this is designed to be informative, inspirational, and just literally getting people together for a quick 30 minutes, stay in the loop on what's happening, hear from different sort of experts and specialists. And it's all about knowledge, it's all about sharing information, and that's what we're about on this webinar. So what we've been doing is looking around the regions, particularly around this word own. So our name is LEOcrowdfunding, learn, earn, own. And literally there are so many different strategies involved in property investment. And the more you dive into it, the more you realize other people are constantly developing new ways and new strategies. And as things happen like COVID, then strategies have to change or be tested and things like that. So what we're doing is literally getting around the regions and talking to different people who have a degree of knowledge of a local market. And today, absolutely delighted to be joined by Mr. Deri Llewellyn-Davies. No surprise, Deri, by the name that this is focusing on Wales today. You don't mind me saying?
Because my name is the closest, didn't you, David? That was it. It's like, find who's the person that sounds the most Welsh.
Exactly. So listen, I'll let you introduce yourself, Deri. The attendees can see on the screen you've got a tremendous corporate business background. High-level speaker. Literally are very, very sought after for working with corporate CEOs, etc. And of course, you're involved in property. So maybe just explain where you are today, because you're not in your usual spot, and then just give us a brief overview on who you are.
Yes, thanks for putting me on. I'll give you certainly a good heads up of what my view is of the Welsh market in a second. My background, I go back 25 years in business now, and I know I don't look that old, but the grey hair is there at the back, certainly. And in that time, I spent a lot of time in the property markets. I love business at its core. I've been through the corporate ranks up to European board level. I've advised over 320 boards. A big selection of those are property. I've been very blessed to guide some of the big guys, such as Savills, etc. And I sit on a number of large property boards. I'm actually here in Oxfordshire today talking to 10 CEOs that have kind of come in for a large CEO forum. This is kind of a very high scale one. So most of these are in the tens of millions. And half the room's property today again, or who have a property bias. So I love property within the business context, because I think they come together quite beautifully, right? Property really is business as soon as you start scaling up anyway. And as soon as you get past the first part, as soon as you've got the first couple of houses on the doors, you're a business if you like it or not. And especially with new regulations and the new world, you should be thinking like a business owner from day one, as far as I'm concerned in property. So that's a quick snapshot of me. I'm still actively involved in property. I'm active on boards. I'm active in my own sites as well, because I love property as a strategy. And we'll talk about what that looks like in Wales at the moment in a minute. But pleasure to be here, David.
Yeah, no, absolutely. Thank you. And we've kind of got a double reason for having you today, as the attendees will see, as well as your knowledge of Wales. You actually are actively involved in a project that we're also involved in, and we will mention that later on, which is a very, very exciting project that you're involved in. So just to remind the attendees, we do love feedback, we do love comments. Again, I keep saying it, but it's true of a lot of property professionals who tune into this. So this isn't just about John, Deri, and me, giving our opinions. We also want feedback. I'm delighted to have input from you guys. So if you make those comments or questions into the chat box, wrong, not the chat box, the Q&A. So we don't use the chat box. John, you had a heart attack there when I said that. So don't use the chat box. Please put it in the Q&A. That lets us deal with it in a better way, and John and I can decide who's going to answer it, etc. So fire in the Q&A and let's get into it. So regarding the Welsh market, I mean, just the headline figures, Deri, that I got my staff to look up was just literally the last house price index. Obviously, from a population point of view, compared to other regions, average house price, and the fact that again the market seems strong. So what's your sort of high-level bird's-eye view overview of the Welsh market currently?
So the first thing I want to do, and this is why I've got my little home-drawn map on the back wall here, which is very important, is we're talking about Wales. And I think the biggest issue is Wales is not one market. And you've got to address that, because I see too many people go, oh, I think I should invest in Wales. Or hang on a minute, that's like saying I'd like to invest in the world and just pile into one on an opportunity. Wales is more fragmented than I think any other of the countries in the UK. Controversial, but true, in that if you look on the map, first of all, if you're from London, you probably don't even know where it is. It's west, keep driving, all right? Now, if you look at the map of Wales, there's a massive divide in Wales in north and south. That is really important for investors. Let's just get the geographical context, because actually there's a very big spread of where the growth's coming from. So Wales north and south is incredibly different. This is full rural belt in the middle. You can't actually drive from North Wales to South Wales is one of the biggest pain in the asses you ever want to do. And most people come out of England and go up the M5. So it's a very disconnected country from north to south. And equally, there's different languages, right? So Welsh speaking, I was taught Welsh speaking in South Wales. I wouldn't be able to understand the Welsh dialect in North. That's how different it is, all right? So people need to understand that context. And also the bias to what's affecting those contexts from a COVID perspective as well. We'll come on into a second. But up here, right on the borderlands of North Wales is Liverpool. So the North Wales market is actually driven by slightly different drivers coming from Liverpool, etc., than the South Wales markets, which is driven, here's the M4 and there's Bristol. So that's the first thing to understand, because we can't just sit here and talk about Wales without a context. And equally, growth in Wales, which you'll see the rise in the last 12 months, that's a bit of a false economy, which we've got to be incredibly careful about, right? So here's what I see. So hopefully that makes sense. And there's one point in here which I'm going to highlight where the hot zones I think are, and also where the stats are showing they are, to be fair, because this is data-led. The first thing is the context of growth. So why I like Wales and as an investment strategy generally is it hasn't overcooked since 2007, 2008. I think the 2000 and 2008 kind of watershed, that last peak we had when we all know what happened next, that's an important context to have. Now, if you look at the London markets, etc., they're up, it's been up 45%, in certain places more. Southeast, again in London, has really bubbled up high. Wales hasn't. So Wales hasn't had the rise since 2007 and 2008. And in a lot of parts of Wales, the prices are similar. And I mean, literally a few points difference between what they were at the watershed then. So you haven't had a bubbled up market in that period, which for me protects a little bit more, right? So it's that, if there is anything coming, if there is a little minor dip coming or correction coming, question mark, then Wales, I think, is a bit more protected than the rest because it hasn't peaked back up. It hasn't bubbled back up like the rest. Now, on average, by the way, the Savills prices show that on average, the peak seems to be, it's up about 5 to 10% across the board in Wales since that watershed. That's an important piece of data, right? Yeah. However, what's more important is most of Wales is similar levels. The peak is mostly here, right? And the peak is very focused. It's like, you know your area, right? There'll be certain pockets of London which are peaking and others are crashing. So you've got to know it's the same in Wales. Now, there's a reason why. It's not just arbitrary why certain parts of Wales is bubbling up, right? So let me just take another context on the side. So you've got to understand, I think that context from 2008 is really important. The second bit is the affordability in Wales is still good. You can see the average house index, house wage price. The ratios are really strike good. It means houses are affordable in Wales and always have been to an extent, right? So the affordability is there. There's definitely a lack of affordable homes. That the stats are coming through that affordable homes is a driver. So that's an important part. And guess what? Buildings down because of COVID and everything else. The affordability is definitely, so the people who are investing more into developments and affordable homes is definitely a strong market and a need and a gap in Wales, as it is in England, by the way. I think we all recognize that. But what's very interesting for me is it's the regionality of the growth. And that's actually fueled by infrastructure. And it's an infrastructure that a lot of people wouldn't understand. I predicted this 5 years ago because I was involved in a number of land deals. And what's happened is the reason this region here is, here's the M4, here's Bristol, right? And there's a bridge. Now there's been a toll on that bridge for basically 30, 40 years. And it cost you like £5.60 to get in and out of Wales. The toll went last year. Now that is a hugely important infrastructure point. There's also electrical lines going in from the train to Newport to London, makes it commutable, speeding up routes. So this means this whole area here as a zone has bubbled up. So if you look at those house price rises, a lot of that has happened around the Chepstow, Monmouthshire area and South Wales area, not the rest. So you've got to be careful what we're looking at here, right? Now, you're looking at the COVID situation. So I think that's the macro look on the market. If you have a look at what COVID's done within the market,
just before, hang on, before you dive into the COVID. So, I mean, that's really interesting and very valuable because of the regionality you're talking about and knowing your own sort of area and knowing the factors that actually all play into whether the house prices are rising or falling. So that's interesting that you've kind of dissected the market in that way. I think that's really, really useful. So then in terms of COVID, then how are you finding that's impacting the confidence? Or if John
one question. So Deri, in your circle, is Cardiff included? And what's the western boundary of that circle you're drawing?
Cardiff's right here. It's a bit of a crap map, admittedly, right? But so
no, it's okay. But so on the edge of the western of the side of that circle, you're including up to what?
So Cardiff, so there's Cardiff, Newport, you've got Bristol over here on the edge here. Swansea's down at this other end. I wouldn't go as far as that, to be frank. You've got this Monmouthshire area. Where the growth sectors are, I'll come on to that in a second after the COVID impact. And I don't think it's an obvious, a lot of people think it's the Cardiff and the city investment. I don't think it is, by the way. I have a different view on that. So when we come to the growth sectors, I'll address that in a second, John.
Cool. Okay, yeah, so a quick sort of one minute on the impact of COVID and the confidence that's affected.
So COVID, so look, Wales is the same as England, right? It's the same impact it's had it. Now, I think what we're waiting for is the unemployment. That's going to be the key part, which will drive part, certainly through the valleys. We've had lockdown. We've been in lockdown. Wales called it well early. And they were, because we're a different devolved government, they were able to do so. I think they called it right, by the way. So we're coming out of lockdown on Monday. So that means Wales is back in action. And they're saying because they cut it early and they acted right, we're back in the game for the next 2 months. I agree with John. I'm just assuming it'll be revolving in and out, and let's just assume we will. But from a property market perspective, for all the right reasons, COVID for me, I think is a positive thing for property in that what's driving it is people driving out of the cities, not, again, the Cardiff bit, John. People are recognizing, do you know what? I'd like to have a garden. I want a bit more space. I want to be able to get out with the kids. So this is why it's driving here, which is all this is rural. So Monmouthshire, the South Valleys, everything else. So a lot of people commute to Cardiff very easily. Bristol. This is why Bristol's now a commuter belt, because that's 20 minutes. And actually you can live in the countryside for a lot more for your money, thank you very much. And we're seeing that rise. And you're also seeing the second-time buyers are nudging the market up, not so much the first-time buyers. And with people moving up the chain, they're not just moving up the chain, they're moving out. And you're seeing the same in London. You're seeing the same kind of move. You're seeing a bit of a rise from the cities, because people say, actually, I can work from home. So if I'm going to work from home, where's home? So we're seeing this. I think the COVID impact will be a ripple. And it's not a bad thing, where I think a lot of people are choosing more rural lifestyles.
Brilliant. Okay, so we've got about sort of 2 or 3 minutes then on the Market Wales overview. So pick, say, one major growth sector and any declining sectors that you see in Wales.
So if you look out here, right, the declining sectors are the rural. It's when you're really in the midst. By the way, that hasn't changed. This is why we can't look at Wales as a whole market, because it's quite flat, right? And you look in Pembrokeshire, which is where I'm from originally, and this whole thing, where it's rural and there's not much opportunity, and where's the jobs and everything else, that's where's the opportunity, right? So we have to be careful, and that's massive swathes of Wales. Now, the typical opportunity, a lot of people have looked at the city, right? That Cardiff's had massive investment for 30 years. I think the opportunity for me is on the way out. If you look at the stats, there's definitely an opportunity for investors in affordable housing development, right? So there's no question. That's something I'm not really interested in. It doesn't float my boats anymore. I started off and I've done a lot of work in that space on boards, but it's not my favorite strategy. And that's only because I'm blessed that I can choose the strategies I want to do these days. But if I was an investor looking at good returns and good money, I would be looking at that right now. However, I think developments in the mid-spec space sector, where it's that up the chain, it's the nice 2-3 bedrooms, family homes, more rural out here. There's a need and there's a lack of demand for it out there. I was with a good friend of mine who runs a massive development company here in South Wales last week, having a cup of coffee. They're fully out of stock. They've sold everything. They've had great demand. They got the pricing they wanted. And this is all through the last year. And I'm like, so you still buying? He said, absolutely. And they're still in. And they're still getting the demand. Now, again, because demand, I don't think has gone so stupid this side of the border that it has in England. And the pricing is still sensible and affordable. And I think that's what's driving the market. So my personal preference on the property market is in development in the mid-space, riding the people that are moving up the chain and moving out more rural.
Okay, excellent. I'm going to save you on the strategy, because the next couple of slides will indicate one strategy that you're involved in. So we'll not do that, and we'll maybe spare John's crystal ball today. He finds this fascinating, that I like to know what people think what the future may be, even though it's only a guesstimate. But we'll spare that as well, unless you've got like 15 seconds on how will the Welsh market look in 2 years' time.
My quick view on it is, I think the Welsh market is going to diversify. Agriculture's got to diversify, rural's got to diversify, and part of this is going to be the staycation market. We'll touch on that in the opportunity we're talking about in a minute, is that we're looking at property specifically here a lot of the time, but actually part of property is the rural staycation. And the rise of the staycation market in the UK and Wales, because people want to go out staycation and they want to go rural, right? And they want to be connected to nature again. We saw this through COVID. As soon as people were allowed out or thought they could get out, the Brecon Beacons were stacked, so was Snowdonia. So there's no question people have got a drive to get back out to nature. And I think you'll see a lot more around the tourism market.
Okay. John, any last minute comments or observations before we move on to the second part today?
I'm all good. This is fascinating.
Yeah, no, it's been very, very useful and really good. So again, if anyone has a question for Deri specifically, feel free to fire it into the Q&A, and we'll try and get them to answer any questions as time allows. So Deri, that was really, really good, very informative, nice and detailed, specific, which is excellent. So let's kind of move on to the next section for today, because it does overlap a little bit with things like strategy and where you feel there's opportunity. And So in the interest of sort of full disclosure, I said earlier, I had two motivations for bringing Deri on. One, obviously, he clearly knows his stuff about the market. He's there, he's talking to developers and construction people. So his insight was exceptionally valuable. But Deri also has a project that we've been working with him on now for, I'm guessing, about 2 months. And this project actually launched what we call behind the curtain. It was a private raise for the first stage. And it was put out to actually a group of high net worth dentists in the Dental Property Club. So they had access to this privately. We ran some webinars, and that Deri actually raised £352,000. The minimum target was 100. So the raise is successful. You're moving forward with the project, which we'll explain in a minute. And now you've willingly let us put it to our own tribe, and we're now going to allow it for about a week to be on our platform. So if anyone else wants to come in and be here for the journey, they can. So people are saying, well, what exactly is it? So let's keep these nice sort of bullet point answers, but briefly explain, Raglan Country Estates, where is it, what is it, and let's sort of run through a couple of slides on this and whet people's appetites.
Yeah, absolutely. Look, we'll keep it quick because those, I think, who want to do more will be on tonight, and we'll go through the details tonight. But the important part about this actually is location, right? Which is why this map's important, because Raglan is right there. So it's right in the hotbed, in between Monmouth, Chepstow, Newport. It's accessible over the bridge, so it's right. It's playing into the accessibility route, and it's 127-acre prime site right in the middle of Monmouthshire. So, and it was a golf course. So what we've taken is an 18-hole professional golf course, and we've stripped it back, kept 9 holes, and opened the championship 9 holes for people to make it accessible, whilst we're converting the rest of the site into leisure tourism. Now that involves bringing in really high-end units. It's playing to this market of staycation, which I touched on earlier. This was my crystal ball, and it's that people wanting to staycation in the UK, people wanting to want a holiday but want it closer to home, want to connect to nature, and also we're building a big retreats arm for this because it's back to corporates, business retreats, etc. People wanting to connect again. So that's what we're building, and again, it's already happening. It's already open. So this was. The capital raise was just part of a much bigger play we're doing on the financial raising, which it's been great working with you guys. We're obviously super successful already on it, and it's just accelerated the next phases because the golf's open, the leisure's open, the cafe is open. We've been holding off restaurants. To John's point, we've just assumed COVID's going to be here in and out until next summer. Therefore, we've built everything around it. Yeah, so we built the site because we've got so much space. You want 2 meters distance, you can have 20 meters distance because we've got 17 acres for you to play in. So it's that ability to go al fresco in everything we're doing. So we've just assumed it's going to be there rather than sitting back and assuming everything's going to be fine. So I agree with John's point on that earlier. Okay,
no, that's grand. So you and your team have literally taken over an 18-hole golf course that went administration about 2 years ago. There's like 500 members of that golf course sort of in the area that are most are probably going to want to play your 9 holes, but then you're creating luxury lodges. You've got plans for all types of outdoor activities, indoor spas and facilities like that. So it's really going to be a high-end tourism and leisure project with multiple phases, and we're involved in helping you raise funds for one of the phases. Now, interestingly, these luxury lodges, I think, are a real sort of jewel of the project. So just explain briefly the concept behind these and how you feel these will fit into the market.
Yeah, and I think this comes back to the crystal ball part, which I know John doesn't like, but I think he does like innovation, because I think there's a difference between crystal ball and innovation. And I see the actual staycation market in the UK has been rising steadily and pretty strongly since 2010. So this is nothing new, by the way. And please don't take staycation as if people are choosing to stay in the UK rather than go abroad. That's not actually true, although it is at the moment. It's people are choosing to holiday multiple times, and therefore they're choosing some of those holidays in the UK. So it's never been about abroad or not abroad. abroad. You go abroad for the sunshine, right? So it's not about that. It's about multiple holidays spread through the year, and some of them being local, especially families who can't be asked to get on a plane like me with 4 kids. So it's a different dynamic, and I think that's a really important part of this. And the second important part to this is the innovation. There's not that much innovation in the holiday market in the UK, and hasn't been for 30 years. This is why we were asked by the Welsh Government to innovate, which is why we've done what we've done. So we're looking at bringing really high-end, classy, innovative design. So you can be sitting in the middle of nature, literally with the grass in front of you and grass on the roofs, and sitting there whilst being in luxury. And I think that's the gap in the market at the moment. And it's proving it. The glamping, the rise of the glamping market, high end, the rise of tree houses who are at 98% capacity throughout the UK and in huge demand. It proves that people just want something new, something beautiful, something elegant, while still being connected to nature. And that's the journey we're on. So this is going to be the first of many sites. And we're looking to innovate all the way and bring really new concept design to play.
Yeah. And I'm certainly looking forward to maybe testing one of these for you whenever you get them built. It suits exactly what I would like as a family.
One of the first trips, so I know you guys will be one of the first ones out in the spring.
You mentioned sunshine earlier, and I'm coming from Northern Ireland. It was like, what's sunshine? Yeah, looking forward to this. So part of the funds that have been raised on this investment raise you're doing, I know is involving around the planning application for these and the initial infrastructure build. So this is part of some of the investment. So just to finalize then before I wrap up, today is really just about plugging a webinar that we're doing tonight with Deri at 7 p.m. I'll give you the link just in a moment for that. But the high level figures on this is a 25% return on investment ROI per annum. It's designed to be a 2-year investment, although depending how the structure works, then Deri and his team can exit the investors after year 1 or around year 1. But really what we're talking about here is a 25% ROI. It's an equity play. Investors become a shareholder partner. Deri's actually allowed the shareholders to have voting rights. So it's around about 10%, Deri, of the overall company you're bringing the investment in for, but you're happy that investors become full, equity shareholders in this project.
Yeah, absolutely. And we've worked with you guys and the regulators to come up with what's the fairest and safest package for everybody. And I think we've got a really nice blend here for everybody. People get their return, they get the security, whilst you've got the comfort of the equity piece as well. So I think we've designed a really good mechanism. Thanks, John. John was hugely helpful in the final design of the mechanism of that. So yeah, and we can talk a little bit more about that tonight for those who are interested. Yep.
So as we always do when we mention financial returns and investment, capital is at risk when you invest in these type of projects. Returns aren't guaranteed, and you can read the full risk warning before deciding to invest. Now, the important thing is, if you kind of like what you see here, get on the webinar tonight. But once you register, and for those who are on the webinar today who are already registered, then you can just log in and download the full offer document. Deri and his team have put together a very comprehensive document about the project, the financials, the forecasts, the different market research they did. So there's a meaty document that you can look at and assess if this is something that you may wish to invest in. So you can take a screenshot of that. There, 7 p.m. tonight, and Deri and myself will be on that webinar, and you can get a hold of the bit.ly link there and register and ask questions. It'll be about 40 minutes or so Deri will do tonight on a good in-depth on this. So John, have you any comments on this project? As Deri said, you've kind of been involved in helping to structure it. You've obviously done a lot of structuring of deals. Just any comments before we wrap up?
So not about the structuring, but what's interesting, as I was talking to someone yesterday, the idea that a couple or an individual or maybe a small team, depending on whatever the social distancing rules are, could rent out one of these little cabins, lodges, whatever, and use it as an opportunity to do a planning session. Do it. I was talking to someone about maybe, go finish your book or draft your book or whatever, that it's an opportunity to do a lot of creative work in a very sort of attractive location and get away, get focused, get the job done. And as long as there's good Wi-Fi and a nice view, sitting there in those chairs, typing away on the computer, it looks perfect.
Yeah, and you're 100% right, John. You'll be pleased to know the podcast studio is going in next week. So you're going to have a full place where you'll be able to film, video film, podcast in the studio. Conference center is going to be ready by January, fully teched up. All we're waiting for at the moment is the fiber. We're working with the local government on the fiber connectivity, because obviously we need to, although we want to be back to nature at the main buildings, we want to be super connected as well. Yeah. So, but yeah, once that's in, which we're promised will be soon, then absolutely this is your place to get away and connect, whether that's, you know, personally with family or on business, which I think is going to be even more important coming forward. People can work remotely and we can work from home, but we still want to get together with teams, right? And we want to get together in a real
exactly.
To reconnect.
I'm looking forward to the live edition of our weekly webinar, John, coming from Raglan and testing Deri's equipment out. It'll be a nice one to do a live webinar from one of our successful projects. So look forward to that. A question just in from someone there: can you invest through a limited company? The answer is yes. It doesn't have to be just as an individual, but if you go on and look at our T's and C's or contact the support team separately, I will happily talk you through that. But yes, limited companies can invest in shares. And let's see, investment opportunity.
Indeed, have, by the way, one of the original shareholders was a Nordic investment fund. So, you know, one of our primary shareholders is a company. So just so that's already, you know, one of the mechanisms.
Yeah, and this is a passive investment. Another question come in there. It's a passive investment, but if I'm sure if people think they've got skills, Deri, that can if they're shareholders and they've got skills that could help you in the project, I'm sure you're happy to have a conversation with them on that.
And part of the private raise was that those who invest in now, which we've already got some pretty high ticket people coming in, which are amazing, we're going to host an event out as soon as this COVID shutdown flushes through, and people are welcome to the site. And obviously we give you a proper showcase. And there's a lot, we don't just want investors, we want advocates, right? That's the whole point of what we're doing here. Showing you the investment and showing you, and you should be proud to have a part of that, right? That's the whole point of what we're trying to do here. So, and I'm sure there's people with some amazing skill sets that will work.
Yeah, brilliant. Okay, listen, Deri, I really appreciate you joining us today. Absolutely fantastic. So anyone can grab that link, join tonight, 7 p.m. You can see, as I already said, the raise is already successful. I've actually already downloaded or drawn down some funds that have already gone to Deri and the team. So already funds raised through our platform have been or about to be deployed on the project. So the train literally is leaving the platform. And if investors feel they want to be part of the journey, then join tonight, get the offer document, and make a decision for themselves. So next week, we're actually going to pause our look around the regions for 1 week. I'm lining up who I think hopefully will be a very, very, very brilliant guest the week after to look at some of the regions within England when we divide it up and do different regions. But next week, I'm delighted that Aisha Ofori is going to join us. She is a director of LEOcrowdfunding, the strategic director. We're going to take a week and look at why investors like vanilla projects. I would say vanilla projects, we're talking about normal development type projects, so not your planning or your sort of HMO conversion type stuff, just a simple normal development out of the ground project. Land is already secured or there's an option on it. Planning approvals in place, senior debt maybe already in place or certainly agreed tentatively or indicative terms. And really what's needed is equity to really start the project. And Aisha is going to discuss what she feels investors look for in these type of projects, why they like these sometimes. And of course, Aisha comes from a very, very strong investment background, being a Goldman Sachs wealth manager in the past, and has been involved in real estate in various different various ways. So really looking forward to that. We've also got a new member of staff who's joined us. He's on here today, and we're going to have him on next week, just very briefly to say hello and introduce him. So next week's going to be really, really good fun. So that's really all for today. You all know you can reach out to John and myself if required. There's all the details. You can get John through LinkedIn, etc. And we're happy to have a conversation with you. So that is us for today. Thank you very much again, Deri, for joining. John, do you want to just say anything before we finish?
2 questions you might want to try to address quickly.
Yes, so the minimum investment on this project is 10,000. That is the minimum entry level in. So that's that one answered. Will you please send
David, just on that point, I think that the reason, there's a reason behind the 10,000. We did a private raise to much higher net worth individuals. So we've already done this behind the scenes, and it wasn't fair for us to lower that minimum threshold to the main crowd. So that was already in place, but whilst we did the private raise. So, you know, and also from a regulation perspective, we couldn't lower it at that point because it wouldn't have been fair.
Yeah, okay, no, that's absolutely fine. And in that we've already done the behind the curtain raise, then obviously it has to be the same for everyone, which is absolutely right. So again, people are asking for the link tonight. There it is on the screen. That's the bit.ly link. You'll get it also on our social media, so you can contact us there. And if feeling that, just contact the support or drop any messages, and you'll be able to get it from there. So thank you very much, everyone, for joining. Let's end it there, and look forward to next week as we look at vanilla deals. And for the rest of this week, stay safe, have very, very successful. We'll let Deri back to your high-level CEO. What is it? You're training them, or you're coaching them. So that's going to be an interesting next couple of hours for you.
It's going to be a good day.
Yeah, brilliant. All the best, everyone. Thanks very much. Have a great day. Bye-bye.